Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today we have a very special guest. Hailing from Toronto, Mr. Frank Holmes is the CEO and Chief Investment Officer of U.S. Global Investors. Mr. Holmes purchased a controlling interest in U.S. Global Investors in 1989 and became the firm's Chief Investment Officer in 1999. Mr. Holmes is a much sought-after keynote speaker at national and international investment conferences. Mr. Holmes is a regular commentator on the financial television networks CNBC, Bloomberg, BNN, and Fox Business, and has been profiled by Fortune as well as the Financial Times. He is a regular contributor to Forbes, Business Insider, Seeking Alpha, and Wall Street Journal's Experts Corner. And now he's been gracious enough to grace my little YouTube channel with some insight and wisdom today. Thank you, Mr. Frank Holmes, for joining me today.
Well, it's great to be with you.
Yeah, I really appreciate it. I know you're a busy man, so thank you so much. Why don't we start at the beginning? How did you get started in finance and specifically the commodities markets, and are there any mentors you'd like to give a shout out to?
Well, I was a pre-med student, and socialized medicine was coming into Canada, and my uncle said, take off the H and put on a W and take care of people's wealth, not their health. And I always got a chuckle out of that, but it was sage advice. And I took that science discipline and applied it to being a research analyst and then corporate finance. Took companies public. The first company I ever took public was Franco-Nevada, which merged into Newmont, spun back out in 2008, and is now a $17 billion market cap, biggest gold royalty company in the world. So I was involved in the genesis of these companies and the silver Wheatons and the gold corps of understanding that formation of capital. But I originally started as, you would say today, a quant analyst.
Yeah, absolutely, and one of the best. Now, you recently wrote a blog posting entitled, "Here's Why I Think Renewable Energy is Finally Living Up to the Hype." Now, are there any particular sectors or ETFs in the space that you're bullish on at the moment?
Well, there are several ETFs, not the one that I could particularly recommend to your listeners at this stage, but there are several different solar panels, and the other big bet we've made directly has been lithium companies.
Yeah.
So we're involved in the creation of new lithium projects, ground floor.
Let's move over to gold for a moment. Now, what are the seasonal trading patterns telling us about the possible future direction of gold prices?
Well, gold's an interesting animal with many dynamics to them. One and most powerful one is the seasonal pattern to gold, which is predominantly driven by what's called the love trade. And it starts off with Ramadan, and it's done it again this year. We're halfway through Ramadan, and we get this gold getting a bottom to it, and is putting on a good rally. And it rallies always bigger in the second half of the year when you have dynamics of negative real interest rates. And that's the other fear trade, and that's what we're experiencing right now. Today I looked at 2-year government bonds, 5-year government bonds, and 10-year government bond yields. And I deducted the CPI number, which is now 2.2%. And guess what? The government is asking you to buy their government bonds, but they're going to pay you a rate less than the inflationary rate for all time periods. Well, anytime that's happened, gold takes off in US dollar terms. In fact, it doesn't matter what the country's currency is. Whenever they're trying to attract your money with a negative rate of return on those bonds, gold goes up in that country's currency. So we have two engines, the love trade and the fear trade, which is very positive and constructive for gold prices.
Interesting. I've heard the fear trade, the love trade. I didn't think there was much love in the markets. I guess there is. Very good. Now let's talk about, you are the CEO and Chief Investment Officer. So in this capacity, what can you tell my audience about U.S. Global Investors and the services they're currently offering?
Well, we're a no-load mutual fund company. We're public. We trade on NASDAQ. Our ticker is GROW. We're well known for emerging markets and resources. We publish every week. We have the tens of thousands of readers in 180 countries. We publish a very concise but yet comprehensive process of 3 sentences to define strengths and weaknesses of each of last week, and what economic data point could come out next week, which could have a threat or be an opportunity for that asset class. We are big believers that government policies are a precursor to change, so it's important to be sensitive to not only demographics globally, but also government policies, both fiscal and monetary. I write extensively on it. There's, I believe, phenomenal content on the website at usfunds.com called, especially Managing Expectations, which says, don't be afraid of volatility, understand it, and catch these cycles like the gold cycle we seem to be entering into again.
And people should check out www.usfunds.com. And I will put that link in the description of the video, of course. Now let's stay on precious metals, if you don't mind, because I'm fascinated with them. Should precious metals be part of everyone's investment portfolio? And is it better to hold the physical stuff, this physical gold and silver? Or how about ETFs, such as GLD, SLV?
Well, I've always advocated a 10% weighting in gold and gold stocks. 5% in gold or gold jewelry. You can buy beautiful 18, 22 karat gold jewelry. You want to buy them at estate sales. It's a great way for your wife or your other half, better half, to wear this beautiful gold. It holds its value. And the other are good quality gold stocks. And you rebalance each year, because the DNA of the volatility of gold and gold stocks, the DNA of bullion, is the same as the S&P 500. However, gold stocks are 2 times that volatility. So anytime you get gold stocks up 40%, 60%, 80%, you should take off profits and buy over other equities. Vice versa, when it's down, you want to turn around and buy these stocks because they have tremendous rebound capacity.
Interesting. Gold jewelry. You know, I've interviewed some of the real masters of gold and silver out there, guys like David Morgan, Jordan Royburn, people like that. Haven't heard the jewelry angle yet. They're always talking about the bars, the coins, the bullion. So this is fascinating. I'm learning a lot today. Now let's move on to something that is just really hot right now, Bitcoin. Do you feel that Bitcoin prices have gotten out of hand, like some people say, or is there room for more upside in the near term?
You know, it's a great question, because I've been really quite fascinated about this crowdfunding that's outside of the normal domain that the regulators try to create to facilitate the formation of capital. This is another world of thought leaders that have been reading or going to TEDx's all over the world, learning about blockchain technology, the importance of and the significance from cryptocurrency, and the leader of the pack, no doubt, is Bitcoins.
Yeah.
And it's always been compared to gold. That's why I call it BitGold. And BitGold is another company that's involved in that whole space. But I think what's important is that it is unique. It has a huge crowdfunding that's outside of any of the regulatory world. It is global, and I think it's going to continue to grow. I think the fact that they can create these exchanges which can transmit and do a stock transaction down the road in 1 hour and settle 24 hours a day at 80% of the cost that the back offices now, banks and brokerage firms and trading stock exchanges, have to provide. So this is a really, truly unique aspect of the internet is unfolding. Now, Bitcoin, what's special with Bitcoin is that it's capped. It's capped at how many shares are going to be, or coins are going to be outstanding. And basically it's a run to deflation in other countries' currencies. And Bitcoin as a sort of gets more attraction. You see Microsoft will accept it for you to buy a computer. You have Dell Computers will accept it to buy a computer. As we get more and more acceptance of that as a coin, I think it's going to appreciate in value.
Interesting. And quick disclaimer for everybody watching this: this is not advisement to buy or sell anything, any commodity or stock or company or sector. I am not a licensed or registered investment advisor. You have to do your own due diligence. Still, I'm getting the impression from you and from a lot of other people I've interviewed. I just recently interviewed Mr. Greg Manarino. He's super bullish on Bitcoin, so I'm getting a lot of that feeling myself. Really excited about it. Now let's talk about. Yeah, go ahead.
I think Ethereum is going to be bigger.
Okay.
In a different way, because Ethereum, it's like the blockchain behind the Bitcoin is a protocol. It's like so that you have HTML, and now you're going to have Facebook on top of that, and you're going to have other things. So I think that the Ethereum is more advanced, that you can do more with it in overall contracts, the trading of contracts for an economic dollar value. So I think that that's another reason why it's gone recently into a faster re-rating.
Yeah. Unfortunately, there's no ETF for Bitcoin right now. That got rejected, of course. Hopefully soon. Wouldn't that be nice? Now let's talk about your blog, Frank Talk, which can be found at usfunds.com. Link in the description of the video. In a recent blog posting titled "Hedge Fund Managers Pour Salt on U.S. Stocks. Look to Europe," you stated that European companies are priced to move compared to American firms. Are there any particular nations or companies that investors should consider right now for a long position?
Well, it's a combination. The euro is starting to strengthen. The EU continues to buy all the bad debts. How they restructure all that debt will be another headache. But the economies with it are robust, and they're growing. And I think there's been some true fiscal policy changes in Italy to deal with unemployment, and unions have basically strangled Spain and France and Italy. So I think there is a transition and a change taking place. And so with that, you're seeing that hedge funds are liking the territory of a stronger GDP. You're also seeing PMIs still remaining where the 1 month is above the 3 months. And that to us is always a good precursor 6 months out of stronger activity. The world turned positive last summer, even with all the negative election news, and the markets responded to that right up to recently. Now the U.S. has gone negative. So that negative PMI just says it's less risk to be in Europe.
Interesting. So let's get back to basics here. What would be your message to retail investors, which is most of my audience, who want to get into the equities markets, but they're concerned, they're worried about an impending market correction? They're worried. What would you tell them?
The idea about being balanced. They say you should have the right proteins, the right carbs, and the right fat for a healthy body. In the same thing as in a portfolio. I'm a big believer in short-term tax-free. We have one of the best top-performing short-term tax-free mutual funds. But I think the focus is more for investors to be short-term tax-free and have diversified portfolio holdings. Focus on those funds. And you mentioned ETFs. There's some great ETFs out there, like the Aristocrats, which only buy stocks that are increasing their dividend every year. Only 51 qualify to the 500 S&P 500. The other one are stock buybacks. I think it's called KNOW. I think products like that, where companies are buying back their stocks, increasing their dividends, are very important for an overall portfolio, and absolutely have that weighting of 10% in gold stocks. We have no low gold mutual funds. We have award-winning funds from that end. So you can always love you to consider our funds. But it's the balancing and then rebalancing each year is really important. So if a sell-off happens, don't worry. If it's just equities, you'll do well because your bond portfolio will do well.
I tend to agree with you on that one. A balance of not just all equities in one sector, or not just all equities, period. Putting some commodities in there. And if you are into equities, you're looking for certain telltale signs of a good company, such as increasing those dividends on a regular basis. That's what I look for. Totally agree. Want to go to crude oil quickly, if you don't mind. With crude oil chopping around between the mid 40s and the lower 50s. Can we expect prices to be range bound for the remainder of 2017? What do you think?
Yeah, I think so. I think you're going to see it 40 to 60. There's your range. And I think if it runs to 60, that the technology advancements by the great American ingenuity of the frackers can turn on that spigot and drill. The cost of drilling has dropped again. The technology is advanced. They can drill so many holes quickly and get that production on the side. So I think it's capped at $60 a barrel. I think at $40 a barrel, that's where the trough is.
Yeah, if it gets there, and if it does, I'm in. That's for sure. Wow.
And you know what you do, and if it does, you buy these MLPs that are they're transporting the energy. They're not involved with the drilling of it or the what they call the condensation of wet gas, etc. Just the shipping of it. They pay nice dividends. In fact, you get back depletion allowances. You get all these other specialty yields higher, and they've been increasing their yields. But they correlate with the price of oil. So if oil falls down, they get a sell-off, and you lock in great juicy yields, and they rebound with the price of oil.
Actionable ideas. I like it, and my audience loves it too. How can people find you, Mr. Frank Holmes, on social media, and how can they contact you for more information?
usfunds.com. It's really simple. You'll see lots of rich content like the Investor Alert and Frank Talk. And you can phone our 800 number, and someone can talk to you and walk you through any specific questions an investor has.
Yeah, I'm a big fan of Frank Talk, and it is Frank. There's always, you get the real deal on there, and that's so much free content on there. I don't know why people are not checking it out right now. They should be if they're not. usfunds.com. Also check out the fund. This is, a real money maker. Consistent income with risk management built into it, through diversification, through looking for good companies and sectors that are solid and reliable. That's what the fund is all about. Mr. Frank Holmes, I know you're a busy man. I really appreciate joining us today on Looking at the Markets. Thank you so much, sir.
Happy investing to all.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.